Hi, my name is Jennifer Davis, and I'm with TMC Financing. Thank you so much for joining me at the 2020 Inspire Conference. Today, I'm going to spend a few minutes with you talking about the SBA 504 loan program, specifically the refinance loan program. It is an amazing program that helps borrowers access cash and reduce their monthly mortgage payments. Before I dive into the refinance program, I'd like to spend a few minutes to just cover the SBA 504 loan program for purchase transactions. You can acquire a real estate or a hotel property for as little as 15% down. No additional collateral is required. It is a below market 25-year fixed rate loan. There's no limit on the total project costs. We've had the opportunity of working on projects north of 10 to 15 million. So again, a wonderful program that doesn't limit the total project costs. And it provides financing for some of the following: conventional debt refinance, which we'll get into the details regarding that in a little bit, building and land acquisition, including ground up construction, renovations and improvements, new construction, mentioned that already, as well as equipment only projects. To get into a little bit more detail around the refinance program, first of all, the SBA created the refinance program to help ease the financial burdens of eligible small business owners and further job creation. The SBA wants to spread the wealth to allow borrowers with conventional loans to take advantage of this affordable financing. Business owners can access equity trapped in commercial real estate holdings by refinancing their conventional real estate loan with a more affordable SBA 504 loan program. Why refinance with the 504? First of all, we can go up to an 85% loan to value. Second, a beautiful long-term 25-year fixed rate interest rate for the government portion of the loan. What's most exciting about this loan program is that you can get cash out, and I'll get into details about that in a moment. You can consolidate multiple loans. As long as those loans are secured by the real estate or equipment, we can certainly consolidate those. And then there's no balloon payment, so you don't have to worry about whether or not you have to refinance this portion of the loan in a few years. Now, the exciting part, the interest rate. Our SBA 504 refi rate is currently at 2.62%. This is absolutely the time to think about refinancing your property. So let me just talk a little bit about how somebody qualifies for the SBA loan program. This is for a purchase transaction as well as a real estate transaction. Don't let the word small in terms of Small Business Administration scare you. Eligible companies are private for-profit companies. Our borrowers must occupy 51% of the building that we're financing. Occupancy must be met within 12 months of us funding our loan. The tangible net worth of the business cannot exceed $15 million per the business tax returns. And the after-tax business net income cannot exceed 5 million, which is averaged over the past 2 years. But in addition to this, if for whatever reason we have a borrower that might exceed these particular minimums, we have something called an alternative size standard, which allows us to look at the number of employees dependent upon the company's NAICS code. The bottom line, if you are interested in the loan program, by all means, have a conversation with TMC Financing and we'll help you understand whether or not you're able to qualify. So let's get into the refi eligibility loan program, or the eligibility requirements specific to the 504. Unfortunately, we're not able to refinance existing government debt. So for example, if you have a 7A on your property or an existing 504, unfortunately, that is not eligible. So the loan that we're refinancing must not be subject to any federal agency guarantee. It also must be a commercial loan or a loan collateralized by the property. A seller carry would potentially be eligible as long as you've had it for over 2 years, as well as any kind of bridge loan debt. At least 85% of the loan that exists, so the existing loan that we're refinancing, must have been used for an SBA 504 eligible purpose. I always think of it this way: if it was eligible to acquire with a 504, then it's eligible to be refinanced with this loan program. But an example would be real estate, construction, equipment. The business must be in existence for 2 years, and the existing loan must have been in existence for 2 years. The debt itself, you must have been paid as agreed for the past 12 months. Now, there may be a scenario in which you had a deferment, particularly in this last year. So, any deferments that were approved after March of 2020, SBA will allow us to refinance that debt. However, SBA will ask that you bring any deferred payments current. The maximum loan to value for the 504 refinance in general is 90% for a straight refinance. And then if we're going to include cash out, the maximum is 85% loan to value. Now, there are some caveats with regards to the cash out. First of all, the most that we can pull out of the property is up to 20% of the appraised value. Again, not to exceed an 85% loan to value. And then the purpose of the cash out can be used for basically fixed operating expenses, salaries, rent, utilities, inventory cost, etc. And we must support that with 18 months of future operating expenses. So let me give you a bit of a visual in terms of what I'm referring to here. In this particular scenario, we have a property that's valued at $2 million. The outstanding conventional loan is 1.3 million, and the requested cash out is the maximum, basically 400,000 or 20% of the appraised value. The way that we would structure this transaction is you'd have a participating bank first mortgage for $1 million. You'd have the SBA government second at 35% or 700,000. Total financing package would be 1.7 million with a total project of 2 million, which is equal to that appraised value. And again, the operating expenses cannot exceed 20% of the appraised value. And when again, there's cash out involved, we cannot exceed an 85% loan to value. Here's a few examples that we'd like to share with you. The Wildwood Inn, this is an amazing story, and that we were able to save this client was paying $8,600 a month. And with a 504 refinance, they were able to reduce their payments to $5,700. In light of the year, this change basically allowed them to retain their working capital and breathe a little bit better, knowing that they had a lower payment for a longer period of time. A $3,000 savings a month. This next example, Larkspur Group, is a cash out refinance. This was an 80-room Hampton Inn in Reading. The client, we were able to facilitate a $10.6 million project, and the client was able to pull out $1.165 million for cash out for business operating expenses, put some much needed cash into the bank to help stabilize things for the years to come. Here's an example. This is not a refinance example, but this just shows you some of the unique ways in which you can utilize the 504 loan program. In this particular scenario, we helped a company secure $5.4 million to purchase actually 2 adjacent properties. The hotels were located next to each other, and although it was 2 504 acquisitions, the owners could better accommodate their guests and manage the properties more efficiently. With the loan down payment that the loan program allows, they were able to conserve their working capital and continue to reinvest in their business. So there's lots of creative ways in which we can utilize this loan program. So I was thinking about, if I was standing in front of you today, what would be some questions that you might ask? I'd probably say the number one question that I get on a daily basis are banks lending on hospitality projects. And I must be honest, it is somewhat challenging right now. I don't think that this will be this way forever. Particular to a 504 refi, what I might recommend that you do is, in addition to having a conversation with the Certified Development Corporation, TMC Financing, I would encourage you to have a conversation with your bank. They have the existing note. And one of the things that might be attractive to the lender utilizing the refinance program is that we're able to refinance their existing exposure, potentially give you some cash out, which will strengthen the balance sheet and again help with future working capital expenses and potentially lower the bank's exposure in terms of their current loan to value. So I would absolutely encourage you that we start the conversation with your existing bank. If your existing bank isn't an option, there are a number of regional lenders that are still looking at hospitality projects, and we'd be more than happy to guide you through that process. Another frequently asked question is, may I pull the cash out for a PIP or for property improvements? Um, that's not an eligible cash out expense. Um, Although what I've seen some borrowers do is we pull the cash out that meets the requirements of the SBA from an eligibility perspective. So that 18 months of future operating expenses that I had referenced earlier. And then essentially the borrower will pay for the PIP or their property improvements utilizing their existing working capital that they have. So that's certainly one way that we can work. Now, again, we're still subject to some of the, not some of it, subject to the restrictions in terms of the amount of cash out that we can pull and that loan to value. But again, we're happy to work with you in terms of getting creative and figuring out a way that works best for all parties. A little bit about TMC Financing. We're a nonprofit with a mission to promote economic development and job creation for all businesses in California, Nevada. And we're so proud to say we just recently received our license in Arizona. We were founded in 1981, and we are the #1 provider of SBA 504 commercial real estate throughout the Western United States. TMC has proudly funded projects worth more than $10 billion, and we have helped 6,000 businesses benefit from this loan program, creating an estimated 60,000 jobs. It is our commitment to be your advocate and advisor for all small business owners. What I want to leave you with here, so again, my name, Jennifer Davis, TMC Financing, and this is my contact information. Feel free to reach out to myself or any of my counterparts serving California, Nevada, and Arizona. And then lastly, I'm going to leave you with a video. This was a project that I was involved with up in Santa Barbara. And what we've had an opportunity to do is interview our particular client. And it just gives you a real good feel for how this boutique hotel owner is thriving with the SBA 504 loan program and how it was able to help him continue to build his brand. Thank you so much for spending time with me today. I greatly appreciate it. Look forward to hearing from you if you have any questions. And I'm going to go ahead and start the video, and I hope you enjoy. I'm thrilled to have a moment to sit down with Alex Kirkwood.
Hi, I'm Alex Kirkwood of Kirkwood Collection, and we're the owners and operators of Hideaway Santa Barbara. And we have been a beneficiary of the SBA 504 loan program and couldn't have arrived at the product that you see behind me without it.
As an owner of a boutique property or a boutique hotel, can you tell us a little bit about the impact of COVID on your business?
Obviously, it's probably one of the hardest hit businesses or industries in the economy. However, through the pandemic, this hotel remained open to service essential workers, and we had a couple nurses and a couple of international families that were stranded and couldn't get out of the U.S. And we were able to service them through the pandemic and actually survive and now thrive through this process. And a lot of that is thanks to the deferment program that was offered through SBA 504. And that has been really helpful to bolster our cash reserves and to float us through the pandemic. Without the 504 program, it would not have been possible. And so the stronger position that we sit in today in pursuing new hotels and expanding our business was made possible by the SBA 504 program and TMC.
Definitely the advantage for a operator of a hotel to come in at 20% down for a growing operation like yourself, that capital makes all the difference. So retaining as much of that as you can, I would imagine, matters.
In my opinion, the cost of the program well pays off in keeping more cash available for future growth. And yeah, it's an absolute, it was a dream come true for us. We had no other way to move forward. Saving your cash and having that lower equity injection can help you expand much quicker.
For that kind of retention of that capital, putting money in the bank account, particularly a time like what we've experienced here with COVID, it makes all the difference in the world to, retain that capital and have access to that. Thank you so much for joining me today. Again, I just can't wait to get there and see the property. TMC Financing, we're blessed to have you as a client. So thank you so very much.
Absolutely.